Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 11th of December 2020. The time has just gone 5:05 in the morning here, GMT. European session just starting up, Asian session just closing, US session our lunchtime, North American session. So right, busy day yesterday and busy day today, so let's get straight into it. Right, so what happened yesterday? Pound on the negative. What we got? Yen, dollar, euro. Right, yen, dollar, euro. Let's put the figures in. Euro plus 231. Dollar plus 57, yen plus 46, pound minus 334. Right, this was yesterday, which was Thursday the 10th of the 12th. So we've got an unopposed negative driver in the pound, a positive rock in the yen, a positive mover in the dollar, and a positive secondary driver in the euro. And the activity was plus or minus 334. Right, moving swiftly on then. So intra-week flows, pound again on its own, negative. Dollar, yen, euro. Dollar, yen, euro. Plus 134 on the euro. Plus 87 on the yen. Plus 61 on the dollar. And minus 282 on the pound. So this is from Monday, beginning of the week, the 7th of the 12th, to about 20 minutes ago. So we've got a negative opposed driver, unopposed in the pound again, a positive rock in the dollar, positive mover in the yen, and a positive secondary driver in the euro. And activity was plus or minus 282. 282. Right, and finally, what's been happening today? Well, we've got the dollar on the negative here. And then we've got a joint situation where we've got the euro and the pound. And we've got the yen on the positive side, so we've got plus 31 on the yen, the joint plus 17 on the euro and the pound, and a minus 65 on the dollar. So this is today, which is Friday the 11th of the 12th. Open to about 20 minutes ago, so they are our most recent flows. What have we got then? We've got the unopposed negative driver in the dollar. We've got like a joint positive rock and mover, so we've got rock, mover, joint, and we've got a positive secondary driver in the yen, and we've got activity of plus or minus 65. Right, so let's quickly talk about the overview then. So the what's going to knock it about? Well, that's a good question, isn't it? But today we've got German CPI, US Michigan consumer sentiment, and more importantly, over the horizon into next week, Wednesday, the 16th, we got the Fed's rate decision. But all that is wrapped up in a massive envelope of Brexit noise. So let's make some sense about what's happening yesterday then. So we've got the unopposed negative driver in the pound yesterday. Everybody was ditching the pound, except us, of course, because we're long. So everybody was ditching the pound, and the opposing flows, which would be positive, were going primarily into the euro here, as you can see. The dollar had some strength as well, secondary strength at plus 57, and the yen had a little bit of strength as well. Now, if you remember, we were expecting, from yesterday's briefing, we were expecting the pound to have the most obvious weakness, which big tick there, I suppose, but we're expecting euro weakness as well, and euro weakness off the back of yen strength, which we thought was going to be via the equity transmission. So we thought equities were going to be struggling, but we had actually, if you were trading yesterday or involved in the markets, you just seen this massive risk ramp up in the start of the American-US session, and we had this sort of situation where everybody was ditching the pound. You had a frenzy of risk on in the equity markets, and then which was basically playing catch up from the sell-off from the day before. But nevertheless, that's what you had, and this depressed the yen. So if you've got flows, massive flows coming out the pound, flows coming out the yen, so there's only two places that the flows can go into, and that's go into. So it's going to be the euro and the dollar, and the euro was flavour of the month. So that sort of wrecked our analysis to a certain degree. Although you'll see later that it wasn't dire, but that was the problem. And we did suggest, much against the general consensus, that dollar, we start to see some dollar strength. Well, obviously, initially after earlier in the sessions, the dollar was getting sold off heavily, but it's come back. Anyway, let's talk about the flows so far this week. So we've got a similar situation here. We've got unopposed negative driver in the pound. So all this week, basically, excuse me, that's the morning syndrome. Right, all this week, people have been ditching the pound, and the opposing positive flows are now starting to steady off a little bit, actually, if you look. And we've got the euro soaking up the most on the positive, yen next, and dollar still positive at the positive rock. Now, remember that a positive unopposed driver, in this case the pound, tells us one of two things. It tells us it's either a floor or it's the start of a major decrease in, or ramp down in, that particular currency, in this case, or complex, this case the pound. So if you remember, we had a very short-term unopposed negative driver in the pound yesterday on the part flows, and we suggested that we thought it wasn't a floor in the pound, it was the start of a bit of a ramp up, and subsequently, so we were proved right on that. But now things are different. We've got longer term situation here. We've got flows that are longer. So let's just finish off before we talk about that. But what's happening today? Well, we've got dollar weakness here, the unopposed negative driver in the dollar, and we've got flows going positive flows going the other way into the yen and the euro and the pound, which are messing about deciding who's going to be dominant. So that caps what we've got. So the key thing to look at here is this unopposed negative driver in the pound. Now, as we said, we now believe that this is a floor in the pound. That doesn't mean that from the moment I've said that the pound's going to stop falling. All it means is that flows are now getting near a maximum amount of punishment from the pound complex perspective. Now, what you've got to remember is the market players that have hammered off the pound and thought themselves very clever, they've all got lots of short profits in there, they are now in the twitch zone. We know about the smug zone, they're in the twitch zone. They're worried about a positive headline on Brexit, or they want to take their profits. You know how wild the pound complex is. It's the most wild in the bunch. So you know, are they going to carry on shorting the pound? And remember, we've got some excellent entries now. We've got the pound New Zealand, the pound AUD, and the pound Australian, all hammered down through, basically, you've driven your Formula 1 car through a ploughed field. And that's what we've done with the model. So we're looking at this situation then. So and interestingly, we put a video out yesterday on the psychology section, part 6, sentiment, expectation and tone. And if you haven't looked at that, it's worth a look at, not just because I'm plugging it, but because this situation now is a sort of a carbon copy of what we were talking about. Everyone and their dog is talking about no deal Brexit. Everyone and their dog is talking about doom and gloom on the pound. The noise is at full volume. Now, because the noise is at full volume and we've got complex positioning of the unopposed negative driver, we are at or near a turning point in the pound. It's as simple as that. Now, we're running like a bucket full of 20% long trades, and we've had to do a bit of fancy footwork on the AUD, NZD and the CAD, but we're still there, we're punching away, and we're expecting a big payday when the short sellers basically either take profits or get a good punch in the backside. Right, so that's what we're looking at. So let's just clear it off and say what we're going to do today. Right, so if we believe that the pound is at or near a significant floor, then that doesn't mean that it can't go down further. So we have a small little arrow there, but with that signifies where it's going. This is maybe where it goes short term. So now that's what we've got there. Now we believe, now the other thing to notice is that the market inevitably has just concentrated on one side of the equation. It's concentrated on how bad it's going to be for the pound, and it's not really bothered about the fact that the euro is the opposite end of the game. And the euro, there's not an asymmetric response in this no deal scenario. The Germans will want to flog us our cars. Everyone and his dog's driving around in a German car in the UK, on lease by the way, but nevertheless, so there won't be an asymmetric response. Now the euro has just been going up like it's 1999, and we believe that the only thing that's going to happen is you're going to get massive flows out of the euro complex, and that leaves you with the dollar and the yen. Now, we thought that originally thought that the yen would get negative transmissions through positive equity flows running into the Fed. Then we changed our tune and decided it's going to be more risk off up until the Fed next Wednesday. So we're expecting neutral to yen strength. Okay, so we've got a bit of weakness in the pound still to come, probably a lot of weakness in the euro. We've got a neutral to yen strength, and we do believe that the dollar is going to be the recipient of backdoor positive flows running into the Fed. So that gives you a scenario of what's happening there. So you'd want to be on the short side of the euro complex. So we're going to stick with euro dollar and euro yen. So we're going to be short those off the back of what we've basically said. So we are expecting significant flows out of the euro complex, and given all the other stuff we're talking about, that we believe is the place to be in a swing trade. We're obviously long the pound in a positional trade, but in a swing trade, short euro dollar, short euro yen. Hope that helps. Thank you very much.